Hey everyone, welcome back to Corporate Decoder. Today we're diving into FMC Corporation's recent filing, and let me tell you, this one's got more twist than a pesticide-resistant bug. We'll break down their annual meeting from board elections to some shareholder votes that got pretty interesting. FMC Corporation held its annual meeting back in April. At the meeting, a little over 108 million shares were represented either in person or by proxy. That's a big turnout, showing that most shareholders are paying attention to what's going on. First up, they voted to elect their board of directors. 13 people were nominated and elected, and they'll serve for the next year. Looking at the votes, most directors got a pretty solid yes from shareholders. For example, Anthony Di Silvestro got over 91 million votes in favour compared to about a million votes against. But let's keep an eye on Colin Johnson. She received about 85 million votes against. But let's keep an eye on Kellen Johnson. She received about 85 million votes for and about 7 million votes against. That may indicate some shareholders are not happy with her performance or direction. Next, shareholders voted to approve KPMG as their independent accounting firm for the year. This is pretty standard, and the vote was overwhelmingly in favour with almost 105 million votes saying yes. Only about 3 million voted against it. Then came the vote on executive compensation, basically whether shareholders approve of how much the top executives are getting paid. This one was close. While it's non-binding, so it doesn't force the board to act, almost 47 million voted in favour, but nearly 45 million voted against. That's a pretty strong signal that a lot of shareholders think the executives are getting paid too much. One of the proposals was about getting rid of supermajority voting provisions. This means that some important decisions currently need more than just a simple majority to pass. Shareholders voted on whether to make it easier to change company rules. While a large number, over 91 million, voted for it, it didn't pass as it needed a supermajority to go through. Next, they voted on giving shareholders the right to call a special meeting. Management proposed allowing it if shareholders owning 25% of the company agreed. The shareholders approved this proposal with almost 79 million votes in favour. However, there was also a shareholder proposal to allow a special meeting if only 10% of the company's shares agreed. This proposal did not pass, with only about 41 million votes in favour and over 50 million votes against. So shareholders seem okay with a 25% threshold, but not with a lower 10% one. Now let's step back and look at the big picture. FMC Corporation seems to have a pretty engaged shareholder base, judging by the turnout and the close vote on executive pay. It also shows some tension. Shareholders didn't approve the amount of compensation to the top executives. This is a pretty strong signal that shareholders are not aligned with the direction or performance of top executives. This is a pretty strong signal that shareholders are not aligned with the direction or performance of top executives. This is a pretty strong signal that shareholders are not aligned with the direction or performance of top executives. This is a pretty strong signal that shareholders are not aligned with the direction or performance of top executives. The company seems to have a good base for now, but with some concerning signs regarding executive compensation. This could mean they might face more pushback from shareholders in the future, especially if the company's performance doesn't improve. There's also a risk that this dissatisfaction could make it harder to attract and retain top talent. Overall, FMC Corporation is doing okay, but it's got some challenges to navigate, particularly in keeping its shareholders happy with how things are being run, and also regarding the supermajority voting provisions. They'll need to pay attention to these issues to ensure they don't become bigger problems down the road. Thanks for watching. If you found this breakdown helpful, be sure to like, comment, and subscribe for more corporate deep dives.